Hey everybody, Scott Cole here from the Futures Trading Academy. In this video I want to just cover a very simple strategy that we refer to as our swing trading pattern number one. And this is essentially the classic holy grail strategy described by Linda Raschke and Larry Connors in their book Street Smarts, which they published in 1995. And just want to cover the basics of this pattern and the way they described it, and how there might be some variations on how to trade it. This is a classic setup here. We're looking at a chart of the December 2010 cotton contract, and what the strategy entails is basically looking for a pullback in a market that is in a strong trending mode. So this is the chart of the December 2010 contract of cotton. As you can see, it's in a significant uptrend here, and as indicated by our 20 period moving average, this is an exponential moving average, and what we look for is a reading in the ADX, which is up here, the 14 period ADX, of 30 or higher. And when we see that at a market's peak, then we just simply look for a pullback to this 20 period moving average. And when that occurs, this is our signal bar. And Raschke and Connors suggested that you would just place a stop somewhere above that signal bar, and that would get you into the move and just your classic swing trade that you would hold for a few days. Ideally they would look for a retest of this high, and that would be the area where they would consider getting out. Typically as a swing trader you want to get out in the direction of your trade rather than wait for it to pull back. So here in this December 2010 contract, on October 4th, the market pulls back to the 20-day exponential moving average. The reading on the ADX at the high was 66, a very high reading. It had been in a very strong trending move, and so you would place a stop here above this high, which was 98.47, and you would be stopped into that trade the next day, and then you would simply look for a retest of these highs at 106.40, and that occurred on this day. Now you could get out on that bar, or your exit strategy is completely up to you. If you're looking for extreme strength or a longer term move, you could certainly look to get out on a gap up like that, or typically we look for a range expansion, and that's our ideal exit point. So we're going to look at a couple more examples. So here I've got the November 2010 soybean contract, and I want to run through this chart because it demonstrates that occasionally this strategy isn't going to be so cut and dry for you to trade. So here we see soybeans has entered a pretty strong uptrend. At this peak here, the ADX reading is 45. It pulls back to the 20-day EMA and then closes below that, and we don't get a buy signal until this bar here. So we've closed below the 20-day EMA. That's not totally ideal, but if the trend is viewed as fairly strong, then you'll look for an entry here. So you place your stop above the high of that bar, which would be over 10.05, and then the market rallies for a couple days before pulling back again to the 20-day EMA. So here's where you have to determine one of your exit strategies. Are you going to exit on a two-day low, 2-bar low, or a 3-bar low if the market goes against you? Your initial stop would be right below the low of this signal bar, which here would be under 993 and 4/8, so it'd be about 993 and 2/8, formerly 993 and a quarter, and ultimately you end up with a market that makes a 5-day low. So you're going to probably, as a swing trader, exit this trade with a small profit, so you never retested these highs. Now you get another signal here when the market pulls back to the 20-day EMA. So here's your signal bar. Here's your first signal bar here when it pulls back. You don't get a trade the next day, so it continues to trade a little bit lower, and then the range also contracts. So that's also a good signal for us. Then we get the actual trade this day, and that move ends up being a range expansion. So that might be a good opportunity to just exit at the close if you like, or wait for the next opener, or you could certainly wait for the retest of this high if you're confident in the market taking those out. So as we move along, the ADX reading here at this peak is 33, so you can see there's a downward slope in the ADX reading, but it's still above 30, and it's still a market that continues to make new highs. So again, we have a retest of the 20-period EMA, and we get an entry signal here, and we get a range expansion there, and you can use whatever exit strategy that you want to develop for yourself. And then finally, at this peak here, the ADX reading is 38, so the market begins to trend again, and you see the slope is going back up on this ADX indicator up here. The market pulls back to the 20-day moving average and closes below it. Closes below it a second day, and we get a range contraction bar there. Our stop is here, and we're stopped in there, and then you get a major range expansion there. You could exit at that close, or the next day you get a gap up, and that's really a good place for you to lock in some profits. So we'll look at one more example, and I wanted to provide at least one example where you probably had a losing trade. So this is feeder cattle this year in 2014. This is the October contract. Back in July, the ADX reading at the peak here is 70. That's an extremely high reading. The market was clearly in a major uptrend at that point. So our signal bar, the market pulls back to the 20-day moving average on this bar here. So initially we would look at a stop to get us in up here. Typically I wouldn't want to place a stop above a range of wide trading range bar such as that one. I'd rather look for a little bit of contraction at the very least, or maybe a signal like this, which is basically a hammer day, as they call them in candlestick charting. In any event, so your stop would be placed above this high. This bar trades above that, so you're long. You end up with a situation where the market closes at a loss for the day. So some swing traders are going to exit at the close there. And then the market on this day makes a 3-day low and comes very close to that low of the original signal day. So at this point, you're probably going to exit this trade at a small loss and potentially look to re-enter. And that's where you need to really be on your toes as a swing trader, because you still have a signal. The ADX reading is still at 48 at this point. It's sloping downward, but we're really more concerned with what the reading is at the peak rather than during the pullback, because naturally the reading's going to start declining when the market starts pulling back. So here's another signal bar. The stop is placed above that high, your stop loss below the low. You get the entry, and then the market makes continually higher closes, and then we ultimately retest that high at 220 on this bar here. This might be a day to get out with an expansion. You could wait till the open the next day. You had a little gap there. So this is a case where your first foray into the market based on this signal might be a loss, and then if you give it a second try, you're going to be rewarded with a profitable trade that more than makes up for this initial losing trade. So that's essentially Linda Raschke's Holy Grail trading strategy. It's a very basic trading strategy. I suggest that you do some testing on your own to see if it actually has some long-term profitability prospects in these markets. There's many ways that you can employ this ADX indicator with this kind of a strategy. Ideally, I would look for a situation where the range contracts on the day or the day after the market hits that 20-day moving average, so that you know that the retracement has probably run its course, and then a breakout above that signal day would give you a little bit more momentum, and you can potentially use an opening range breakout type of entry to make sure you've got some intraday momentum going for you as well. So that covers this swing trading strategy number 1, and for some more great trading strategy ideas, please visit our site, thefuturestradingacademy.com. This is the first in a series of videos that we're going to be covering a bunch of different swing trading patterns, so please be sure to keep a lookout for some more videos. And thanks for watching.